What's up, subscribers? Welcome back to the channel. If you're new to the channel, go ahead and subscribe below and hit the like button so you can see more of our channel's videos and so that YouTube can suggest more of our videos on your page. Seriously, go ahead and subscribe real quick. I'll give you a second. Also, I want to give a quick shout out to Jason. He signed up for Robinhood using the link below and he was able to get 1 free stock. Thanks again, Jason, for signing up and watching the video with us. Now that we got that out of the way, for today, I want to talk to you guys about some of the bigger mistakes that I see beginners making in the stock market. The biggest mistake that I see beginners in the stock market make is pulling their money out anytime there's a market correction. Many beginners make this mistake, and it's one of the biggest mistakes that you can make, in my opinion. When I first got started with stocks, I kind of did it a couple times myself. It was one of the bigger lessons that I had to learn. It's kind of the reason that most people who get in the market for a short time and take a loss kind of never re-enter the market. And pulling money out during a correction is so bad, in my opinion, because it violates one of the major rules of the stock market, and that's buy low and sell high. If there's a stock market correction going on, that just basically means that some stocks are kind of overvalued. The market is realizing it and starting to pull back on buying of those particular stocks. When this happens, a lot of times stocks temporarily go down in value, and this can be looked at two ways from an investor standpoint. Many beginners look at it as if they're taking losses. So since they're taking a loss, they might as well go ahead and pull their money out now before they take a bigger loss. If you're a long-term investor like myself, typically you're going to look at this as a time period where you're basically getting a discount in the market. The reason I say that is because if you have a slight market correction going on, most stocks are going to get pulled back, but they're going to shoot back up eventually because there's not anything necessarily going on directly with the company that's causing the stock to go down in value. For instance, there's currently a stock market correction going on due to the coronavirus. A lot of stocks are down 5, 10, some even 15%. And a lot of newbies in the stock market are beginning to sell their stocks. To the people who are doing that, I'm going to tell you to hold on and don't do that, because if you purchased at a higher amount and now your stock has dropped, you're taking a guaranteed loss. It's in your best interest to go ahead and wait for their stock to go back up so you can at least get your money back if you do decide to sell out. And if you're like me and you're purchasing a stock for the long term, small corrections shouldn't really bother you. You should be able to kind of stick it out through that if you want to make money in the stock market long term. Another big mistake that I see beginners making in the stock market is waiting on a dip or a recession before they buy. As I've discussed many times on this channel, waiting for a dip is a good time to purchase because you're getting stocks at a discounted rate. But if you're new to the market, you shouldn't always wait for a dip or a recession before you begin to buy stocks. I know a lot of people who aren't currently buying stocks and they're waiting for a recession to happen before they get in. Do keep in mind that in the last year, stocks have went up an average of about 30% if you're looking at the S&P, NASDAQ, and Dow Jones. In my case, some stocks such as Tesla have maybe even doubled or tripled within the last year. So to those people who are waiting for that recession or that dip in the market, they missed out on all of those gains over these past years. As a matter of fact, many people have predicted recessions numerous times in the last couple of years, and the majority of my stocks have actually doubled over the past couple of years. So had I actually waited for that recession to happen, I would have missed out on the doubling. Keeping in mind that when a recession happens or a dip normally happens, you're looking at anywhere between a 10 to a 50% loss of your stocks. But I'm at more than that in growth over the past few years. So even if I lost it, I would still be at a net gain. And if you look at what recently happened with Tesla stock, how a lot of people kind of waited for that dip, including myself. I set a couple stop losses as the stock was going down so I could purchase as it was going down. Had I waited for it to reach that dip, that 180 dip that it reached for about a week, I would only been able to purchase a few stocks as it went up because the stock went up rapidly in a short amount of time. So had I waited for the dip, even with that Tesla stock, once again, I would have missed out on a lot of profit. The third and probably one of the biggest mistakes that I see with beginners in the stock market is going to be not doing the research when it comes to picking stocks, ETFs, bonds, and things like that. Always know what you're investing in. A lot of people just watch videos Especially even me, myself, when I began, I did it and I got caught up in it for a while and I had to learn not to do it. Just listening to what other people would say, famous people, people who have been in the stock market longer than you, analysts, a lot of times they can be wrong, or a lot of times they can be information that they don't know about that you can find out that can actually be used to your advantage. Once again, I want to use Tesla as an example. About a year ago, a lot of analysts were down on the stock. A lot of people in Wall Street really didn't like the stock. But I myself did the research and saw great things going on with the stock. I saw where they were going, so I began to invest. Had I listened and not done that, once again, I would have lost out on a lot of profit. Make sure you're looking up companies. Make sure you're looking up their PE ratio, their CEO, what they plan on doing. Start looking over balance sheets, looking at revenue, profit. Is the company profitable? Will they be profitable in the future? What do they plan to do in the future? These are things that you can quickly look up. Take about 15 minutes to an hour to research a stock before you actually purchase it. And once you do purchase it, make sure you're coming back every now and then to check on the news that's going on with the stock, just to make sure your stock is doing well and make sure the company is still on track to do what you foresee it doing in the future. I'm not saying that you shouldn't listen to others. By all means, there's a lot of great advice out there, but make sure you're doing your own research so that you know what you're actually purchasing and you have some type of value that you see within that stock. All right, I'm going to conclude the video with those 3 mistakes. I'll probably do another video sometime in the future to list a few of the other mistakes that I see beginners make in the stock market. With that being said, if you're new to stocks and you're looking for a way to get into the stock market, there's a link below in the description for the Robinhood app. If you sign up using my link, you can get a free stock. Robinhood is a company that I've been using for years. I really enjoy their platform. It's very easy to use, and they do not sponsor my channel or anything like that. Make sure you subscribe to the channel, hit the like button so you can get more videos recommended on your news feed. Thank you guys for watching this video and have a great day.
Hop in the bag, go get the money, count that cash and back to the money, put that on repeat. Go get the bag, and now we coming. If you really about your money, put $1 in the app. If you really about your hustle, put $1 in the app. You ain't taking else for nothing, put $1 in the app. You ain't got no hustle muscle, get the fuck up out of hell.